Welcome back, Kryptonians, to the Chart Experts continuing coverage of Bitcoin and the crypto charts. Now, we're going to start off just by looking very quickly at Ripple XRP because we made a call, which at the time many of you may have been thinking, oh, that's brave. But we've done that consistently. We've done it with Bitcoin, both at the 69K top and the 15K bottom. And that's just a demonstration that our methodology works. Okay, so here we are looking at XRP, and I'm just going to change over to the daily chart because it was precisely on the 6th of November, which is exactly here. Okay, when price presented this strong looking candle. Okay, we'll just zoom in also. It presented this strong looking candle. We'd had the positive result from the SEC versus Ripple case, and everyone was turning very bullish on XRP. And you may be thinking, if you're looking at lagging indicators like moving averages or whatever other methodology people use. Most of these methodologies, sadly, are wishy-washy. They don't give you proper market direction. We use a wide variety of methodologies, and we also use our own proprietary methodology. And that basically told us that this market was looking very weak. Now, given the fact that we'd seen this strong move higher, yes, it was brave if you don't use our methodology. Okay, if you're following other methodologies which do not provide the insight that our methodologies provide, then yes, it would appear to be brave. But for us, it was simply following our methodology, simply following the same type of methodology that allowed us to call Bitcoin at a top around about that 69K level and the bottom at almost exactly 15 and a half, really. So yes, it was fantastic. The market responded as we thought it might. Now, that's not to say that we are always 100% correct, because the market can always surprise. But when you follow your methodology and when it's been proven to be correct time and time again, then we can have confidence in our methodology. Okay, so there it is basically. Now price has moved roughly around about 30% to the downside at last measurement. Oh, it was 32. Okay, so 32% down from our call, and things are looking good in terms of our forecast, which is basically that XRP needs to move significantly lower. Okay, now again, this is technical analysis done on the 6th of November, and since then we've also had the alleged hack of the Ripple wallets on certain exchanges. I understand. We don't have the full details of that. We did not need the full details of that. Okay, because the chart itself, when we read it, that chart was basically telling us that there was something wrong with this the price structure on Ripple. Okay. So read into that what you may, but the chart told us that something was wrong. Okay. Okay. Right. So let's switch swiftly over to Bitcoin because there are some interesting insights there as well. Okay. So we've covered in the past that we believe that up to 25K was accumulation. Then the market was manipulated to basically allow retail and breakout traders to enter the market, and then they were flushed out by the whales, and then therefore, along with other things which I won't go into, um, all of this below 32k was accumulation for the whales. Okay, right. So since then, we've seen on January the 10th the ETF approvals that have occurred, and we know that there's been a bit of toing and froing in terms of selling from GBTC and accumulation from the other ETFs, and we understand that that's basically cancelled each other out. Okay, now in terms of how the chart looks, we've seen some people refer to this as a Wyckoff distribution. Um, I do wish that people would not simply just, look at a pattern and compare it to something previous, and then say that, oh, this must be that, because quite frankly it's lazy. Okay, um, looking at a pattern, it needs to be read in context of where it is on the chart. And I know it's hard work, which is why most people don't bother to actually read the story of the chart. So I'm going to say this as simply as possible. Okay, um, whales have accumulated the market, and they want to sell at high prices. Okay, retail breakout traders have been flushed out of the market. They are looking to enter the market above 48k. They've not yet entered the market. Now, if they haven't bought into the market, then who are the whales going to be selling to? And do the whales want to be selling at an area where most of the other participants are not even in the market? Yes, it's true that ETFs have begun accumulating, but they're going to be accumulating. They need to do a lot more accumulating from our reckoning, and from most of the analysts' opinions. They need to continue to accumulate. Okay, so if they are buying the market, then let's just have a look. Okay, then the market should be moving higher. Okay, so it just does not make sense for this market to start a distribution here and for it to go lower, because there really is nobody to, who's going to buy when the whales are selling, should they wish to do so. Okay, above 48k, which is where we are saying that the market should go, there would be buyers of the market, and they will willingly buy when and if the whales start to sell and to create a distribution. Okay, so I hope that makes sense to you, which is why we are not expecting for this market to go lower. In fact, what we should be seeing really is for the market to remain volatile, to continue to move in the direction of 40k, but to try to try to shake people out of positions, but only after bringing them into the market. Okay, now I'm just going to give you an illustration of that, because it's here that we can see. Let's just zoom in to this area here, and what we can see is that participants were allowed to come into the market. So we had this particular excuse me. Okay, so I've just marked up the chart for you. So here we can see there was this high here, uh, price broke above that high, enticing breakout traders to enter the market. Now, and remember, this is not a major level here, so these are basically day traders entering the market. Um, and once they were in the market, um, again, another breakout trade occurred here. So price moves higher. It's a little bit hard to see with that line, but let me just get rid of that line for the moment. Okay, right. So price moves higher. There were people with buy stops entering the market there, and then again there. And then what happens? So they've enticed people to enter the market, and then what did they do? They flushed out those particular entrants who had their stops below this level, and then again below that level. Okay, and then once they've been stopped out, then the market came back into its natural rhythm and started to move higher. Okay, so here they are pulling people in and then flushing them out, and when they flush out, they sell their positions to most likely ETFs, most likely to Coinbase and the like, so that this new volume can be harvested and then sold to the ETFs most likely. Okay, so that pattern needs to occur as price moves higher. Okay, I hope that's clear to you. So we are expecting for price to continue to move higher because that's where it needs to go to entice more volume to enter the market. But as we see that volume enter the market, we expect to see a similar pattern to this, enticing people into the market and then flushing them out, enticing people to enter the market and then flushing them out. And all the while, it's going to happen more and more as price moves higher because higher prices are more attractive to buyers, and they need that upwards trajectory to occur in order for new volume to enter the market. Okay, I hope this has been clear for you. If it has, please give the video a thumbs up, share it, subscribe. Hey, this is Asim at the Chart Experts, wishing you every success. Take care of yourself and your crypto, and join us on Patreon if you can. Till next time. Bye bye.